Welcome, everyone. We are doing a training called OCJP Common Invoice Issues. And today we're going to go over the most common problems that we see when we are reviewing the invoices. So the objective of this training is going to be to look at the invoice review process and discuss common issues or mistakes that can delay the review and approval process of your invoices. And then we're going to talk about best practices when filling out and submitting invoices. So let's first go over the invoice workbook process. The Office of Business and Finance creates the invoice workbook once the contract has been reviewed and approved. So your contracts come through. All of OCJP reviews it. It goes through a couple stages. Then it gets sent up to OBF. OBF then creates what we call a workbook. They create the workbook, which is you all's invoice, and then that gets sent out. The invoice workbook sent out by email to the subrecipient to use throughout that contract year. So you will have 12 tabs in that invoice workbook, and each month has its own tab that you will use. If your agency requests and gets an amendment, and it changes the budget in any way, a new workbook will be sent out. So remember, if you midway through the year, you do an amendment, you will receive a new workbook, and make sure you use that workbook. It's important to note that any agency receiving an amendment with a budget change must use the new workbook. So if you try to use the old workbook before the amendment, it's going to delay the process. It's going to delay your payment process. So please make sure that you remember to use the new workbook that's sent out. So we're going to look at the invoice that you all should be getting. This is what it's going to look like. It's going to have your total contract budget, including all match, will be in the total contract budget. Your year-to-date expenditures will be in the middle column, and that's just a cumulative total of all your months added together. And then in the month, or in the column that says this month's actual expenditures, that is for your current month that you're submitting. And there's some information over to the right side of the invoice, but that is all filled out prior to for you all receiving it. And there is some calculations under the amount due and the match. But right now, as far as you all are concerned, this is what it's going to look like when you receive it. So there are multiple issues that we see, common issues that we see, and we're going to go over each one individually. But these are all of them kind of in a bird's eye view. Sending more than one invoice at a time in the same PDF file. They're very easy to overlook when they are not separated in their own PDF. So for example, if you're one of the agencies that submits quarterly and you send 3 invoices at once, just make sure that each invoice has its own PDF file. So when you send the invoice in, it should have 3 attachments, including your certification. So make sure that those are all separate and they're not in one big PDF file, because they do get overlooked a lot. That will delay any processing that you have, or it could delay just getting payment in general. So make sure that when you are sending those in, if there's multiple, that they each have their own attachment. Ensure that your verification certificate is attached. That's a common issue that we see, that it's not attached, and so that delays your invoice processing. No signature on the bottom left-hand corner of the invoice. That is also an issue that we see quite often. Another one's charges in the zero balance line. So if you do not have funds that are listed in a line item, do not put funds in that. If there's a zero balance, don't put money in there, because that means you don't have a budget for that. Another issue is over the 20% rule. And then another one is year to date not adding up correctly, budgets being adjusted and not matching what's on the contract, in-kind expense test or overmatching, and then indirect costs not charged according to the approved percentage. So we'll go over each one individually, and that's sending more than one invoice at a time in the same PDF file. So as I stated earlier, just ensure that when you are sending invoices for reimbursement, make sure there's a separate PDF for each one. Multiple invoices in one PDF often get overlooked and have the potential for non-payment. This creates an administrative burden for both the agency and OCJP admin. If you're not receiving your payment, it's really hard to run your program. So ensure that each invoice gets its own PDF file if you're sending multiple in. The verification certificate not attached. Please ensure that the certificate letter is filled out and signed when the invoice is submitted. Not having that certification signed will also cause a delay in the processing of your invoice. So the verification certificate letter, this is what it looks like. Just make sure this is all filled out and that it is signed and that it is also attached when you're sending in your invoice. The next one is no signature on the bottom left corner. So I've highlighted where their signature needs to be, where it says authorized signature. Make sure that that is being signed before you submit. So if it's not signed, those are some of the things that they look at. And if it's not signed, it's going to get sent back. So that will also cause a delay in your processing of your invoice. Charges and zero balance lines. So these are just some example of where there is no amount in the contract budget. So if there's no amount there, please ensure that there is no actual expenditures being charged to those lines, because that is also something we look at. And if there is anything in there that's not in the budget, it will get sent back. So be aware, be very careful. There are no expenditures charged to a line that has a zero budget amount. We see this a lot if an agency received an amendment that moved money from the budget into a new line that did not have money in it prior to the amendment, and the agency is using an old invoice workbook. So this goes back to the beginning when I said, please ensure that you are using the invoice that came with the amendment. Sometimes it takes a couple weeks for OBF to be able to process this and get your workbook to you. So if there is a delay in you getting the new workbook, please reach out to your program manager so they can get with OBF and see if there's any kind of issue that is causing a delay. But please make sure if you have an amendment that's putting money into a line that did not have money in it prior, that you are making sure that you use that new invoice. Because if not, that will get sent back to you and cause a delay in processing your invoice. We're going to go over the 20% rule. OCJP allows for movement of 20% of a line item. Agencies may make changes to their project budget through the use of the 20% rule. This allows for changes to approved budget lines, except for salaries and benefits and indirect cost and in-kind, as long as those charges are for no more than 20% of the line item total. So good rule of thumb, you're going to take your lowest of the two and take that 20%. And if that line item, let's say one's $400 and the other one's $1,000, you're only going to be able to take 20% of the $400 line. So remember that it's always the lowest of the two. Prior approval from OCJP is not needed to utilize the 20% rule, except as detailed below. The cumulative total amount that a budget line is increased or decreased within a fiscal year cannot exceed 20% of the total line. If it is, then you have to reach out to your program manager and they have to do an amendment. Movement of dollars does not include line items with $0 amounts. Any increase made to a budget line item must be offset by an equal reduction of one or more approved budget line items. And movement of dollars does not change the project purpose, goals, or intended outcomes. Very, very important. If you're trying to use this 20% rule and it changes anything within your project scope, then you need to reach out to your program manager and discuss. Movement of funds using this process must adhere to all other OCJP grant requirements that may apply. So here's an example on the 20% rule. There is $200 in the budget's travel line item, and you want to move more money into that travel line. The maximum amount that can be moved into the travel line item is $40 for the entire fiscal year. So you take 20% of that $200, and that's $40. You can move that $40 out of any line that has an extra $40 that you are not going to spend in it, and move it into it. A separate approval line item must be reduced by the corresponding $40, and the reduced amount cannot exceed 20% of that line. So it's usually just a rule of thumb. It's the lower of the two. If you had a line item that only had $100 in it, you would not be able to move the whole 40 because 20% of that line is less than the $40. So here's an example. We had a line item that had $200 in it, and then another line item that had $10,500. So for the example, we're taking 20% of the travel line, which is the one with the 200 in it, and increasing it and the same amount out of the professional fee line. So we wanted to move 20% into the travel line, and it's coming out of the professional fee line. So we take the 200, calculate the 20% because it is the lower of the two. It's $40. So we're able to increase that line to $240. And here is the end result, $240. And it's coming out of the professional fee, and the amount is still the same for your total contract. Year to date not adding up correctly. So sometimes if you go in there and change anything manually, it's going to cause the calculations that are automatically in there to be off, and then it will not calculate correctly on your year-to-date actuals. So if this happens, that's something else that is reviewed, and that will get sent back, and that can cause a delay and an administrative burden on both parts, on us and on the agency itself. All the workbooks that are sent have an automatic sum for the columns. If that gets taken out or changed, then the total can be off. This will delay the processing of your invoice. So just ensure that all the numbers add up correctly and that you're not changing anything. So the adjusting of your budget's not matching what's on the contract. That's another issue that we see. A lot of this is due to amendments that you're trying to send something in and you've not gotten the new workbook. So then you just take the old workbook and try to make it work. Please don't do that. If you are getting an amendment and it's been a little while and you've not received that new invoice workbook, please reach out to your program manager so they can follow up with the agency or our OBF that does the invoice workbooks and see what the holdup is. There may be some reason that they've not gotten that workbook out. In-kind expense test for overmatching. So if you have match and you're using in-kind, that you should have this in-kind test that pops up at the bottom of the screen. And as you can see, this is 1 cent. It cannot even be 1 cent. Excuse me. It has to be at 0 at the end of the year. If they're at any point at the end of the year, June 30th, if it has a negative amount, then it will get sent back to you so that you can make an adjustment so that it will either be 0 or above. And then the last one is your indirect costs not charged according to the approved percentage. So if you are using indirect cost line, and either whether you're using the 10% de minimis rate or you have an approved indirect cost rate, just ensure that whatever your base is on your indirect cost rate that was approved is what you're charging that amount to. So here's an example. For the month of July, an agency used salaries and benefits for their cost base to calculate their indirect cost, and the new rate was 20%. And for the month of July, the salaries were $10,000. So then the indirect cost line on the invoice workbook should show an expense of $2,000, which would take your $10,000, which is what your base was calculated on, and taking 20% of that to equal the $2,000, which would be on your invoice to submit for that particular month. So just make sure you're reviewing that, because that is also checked when we are reviewing the invoices, and if it's off, they will send it back. So let's talk about best practices. Ensure separate PDFs are sent if sending more than one invoice at a time. Ensure that the verification certificate is signed and included with invoice submission. Ensure that your invoice itself is signed on the bottom left corner where it has the signature line. Before the invoice is submitted for processing, review all budget lines to ensure that there is no expenses charged to align with no budget. And ensure if you have received an amendment, you are using the new workbook, not the old one. Ensure that when you are applying the 20% rule, you are complying with all rules that go along with it, and that the calculation of the 20% is correct. Ensure that the formulas have not been altered and the year-to-date amounts are calculating correctly. Ensure that the budget listed is the same as the contract, especially if there's an amendment. Just make sure that everything is in line with what's in the contract. Ensure in-kind test is not a negative number at year end. It can be 0 or it can be more. It just cannot be negative. Ensure that the indirect cost line is charged appropriately with the amount approved. So again, if you have 10% or if you have 20%, just ensure that you are charging the correct lines and that it is equal to the amount that you are allowed. And of course, if you have any questions related, please reach out to Wendy Heath or Lori Robertson. Both of their emails are attached. And please let us know if there's any issues or you have questions. We appreciate everybody. Thank you very much for your time.